How's it? Sean from Mel's YouTube Booksite YouTube channel. Okay, today we're going to be breaking down the inventory stock control account. We're going to explain what inventory is and what stock is in nuts and bolts. Okay, because inventory is very important for a company because that's all the company's money. Stock is basically the stuff that you buy from your suppliers, the stuff you buy in order to sell that stuff. And then you've got to keep it somewhere before the customers buy it. So you buy it up, you keep it in a storeroom, and then you sell it to people who want to buy it. Or you use it to make other parts for your business. All right, that's really what it is in a nutshell. But we're going to break it down for you so you can understand it better. Okay, so let's start at the top. What is a general ledger? A general ledger is where all financial transactions of a business records are kept that affect a related group of item entries entered throughout the months and the year. For example, inventory stock, purchases, sales, suppliers, also known as accounts payable, customers, also known as accounts receivable, cash book, petty cash, assets, such as computer, cash registers, etc., VAT or GST, and journals. Okay, inventory stock control account. Let's start with that. Very important. An inventory stock control, well, an inventory stock account is a record kept of the stock we bought from suppliers and the stock we sold to customers each and every month. All right, that's really all it is. It's just an accurate record of it. So how do we keep records of that? We're going to show you that now. The inventory stock control account is where you enter the goods stated on the invoices you receive from your suppliers and the customer's invoices made out to his customers by the owner of the goods he sold and are all entered in the general ledger. The stock bought sold is counted and checked at the end of the month and is usually kept in a stock room on the premises. Really just a breakdown of how stock is brought in and sold. Okay, number one. The inventory stock account involves the supplier's invoices and the customer's invoices, including creating the purchaser's control account from the customer's invoices, and the purchaser's figures are then carried forward and entered into the inventory stock account on the credit side. Number two, the owner, the middleman of a warehouse, buys bicycles, spare parts from factories that manufactures these items at an agreed cost to the owner of the warehouse. 3. The owner of the warehouse then sells the goods to retailers with a profit margin and VAT that he includes with the cost he paid for the goods to the retailer, who then buys the bicycle parts from the owner, and they in turn sell the bicycle parts including their profit margin, the cost plus VAT they paid for the parts, to the general public at large. Okay, so inventory stock control account. Okay, let's go and do one. All right, so this is an invoice. We went and bought from factory A and factory B. We bought stock for our business. The bicycle shop suppliers invoice. So factory A invoiced us out. We bought 50 saddles at $20 each. We bought 50 pumps at $10 each. That's $1,500 in total. The VAT that they charged us was $225. It came to $1,725 worth of goods we bought from factory A. And we also bought, sorry, we also bought from factory B as well. All right. That's the invoice that they invoiced out to us for the stuff that we bought. The invoices the owner received from factory A and factory B includes the cost price plus their profit margin, including VAT. This invoice is also referred to as an accounts payable. Okay, these two invoices, factory A and factory B, show what goods were bought and are then entered into the inventory stock control account section in the general ledger. At the cost price, the owner has paid for them, excluding VAT, and then entered in on the debit side of the inventory control account as they are an asset to the business. So there's our inventory control account. Now we're keeping the credit side blank because when customers come buy from us, we will then put those entries in there. So on the debit side, we're going to now enter in the stock that we bought. Factory A was 50 saddles at $20. It's $1,000. Factory A, we also bought 50 pumps at $10. It's $500. And we bought bells and pumps from factory B. We added up that total, $2,250 in total. That's the stock we bought. Now, as you said, I'm going to repeat this again. On the credit side, you will see there's nothing there, but as customers come and buy from us, we will then put entries here on the credit side. Okay, now we're now going to enter the customer's invoices, also referred to as accounts receivable, from the owner of the warehouse in which he sold goods to the three retailers at cost price, plus his profit margin and including VAT. Okay, so here's the invoices we issued out to these customers. We had three customers, Mr. Collins, Mr. Church, and Mr. Welsh. Mr. Collins came and bought 10 bells from us at $15 each, 20 pumps at $20 each, and 15 saddles at $35. Total was $1,075. The VAT that we put on his invoice was $161.25. The total amount sold to Mr. Collins, we invoiced it out to him, was $1,236.25. Now we went Mr. Church, we also invoiced him out for the stuff he bought, and Mr. Welsh as well. So these are the invoices we issued out to our customers. All right, so these purchased goods stated on the customer's invoices must now be entered into a purchaser's control account in the general ledger that was sold to the retailers and must be entered in at cost price, excluding VAT, and put on the debit side in the purchaser's control account. The purchases are goods that have been sold to customers that have now decreased the owner's stock and are entered in the inventory on the credit side. Sorry, on the credit side. Okay, so purchases control account. Mr. Collins, Mr. Church, and Mr. Welsh. 10 bells at $5 each. That's $50. He also bought 20 pumps at $10 each. That's $200. He bought 15 saddles at $20 each. That's $300. Came to $550. The total that Mr. Collins bought. Then we did for Mr. Church as well. He also bought some stock, and Mr. Welsh bought some stock. The total amount of stock that was sold to these three customers was $1,275 if you add all of this up. Okay. Purchases stock sold to retailers. Total saddles sold 30 at $20. Total pumps sold 50 at $10. Total bells sold 35 at $5. Net total cost $1,275 to put to the inventory on the credit side. Net total cost $1,275 to put on the debit side in the trial balance. All right. Okay, so oh, sorry. Now we're going to fill out the credit side. Remember we did this? We did the March's inventory stock and control account just further in the beginning, further up. We filled out all the suppliers, the stuff we bought from the suppliers. We put the stock in here. Okay, now some customers have bought from us. Remember, Mr. Walsh and Mr. Church. So we're going to put here the amounts that the stock went out, what was sold. Okay, so 30 saddles at $20, it's $600. 50 pumps at $10 is $500. 30 bells at $5 was $175. Okay, now the sold stock to the customers at cost price excluding VAT, just to remind you again. And also that stock that we did from our suppliers, that we bought from our suppliers, was also bought by the owner excluding VAT. Okay, so the total amount that went out that was sold to our customers was $1,275 worth of stock. The total stock that was bought was $2,250. Okay, so the stock bought $250, as I said, $2,250. The total stock sold was $1,275. The net total is $975. This closing stock figure must be carried forward and put on the debit side of the inventory account in the new month of April. So we're going to carry that forward. Okay. The net total, $975. This closing stock figure at month end must also be put in the trial balance on the debit side. All right. Okay. March total closing stock of goods to carry forward into April. March's bells bought was 50, but the bells sold was 35. That leaves us with 15 left. March pumps sold was 100 pumps that we bought. Pumps we bought. These are all bought. It was 100 pumps we bought, but we sold 50 pumps, so we got 50 left. The total amount of saddles bought was 50. The total amount of saddles sold was 30, so we have 20 saddles left. Now this, to carry forward, closing stock goods into April and put in the inventory stock account on the debit side. So basically, it's a rinse and repeat. Every month you buy new stock, you carry forward last month's old stock, and then you put it in the inventory side. And then as you buy stock in that month and people buy stock from you, you just the following month you do the same thing again. You work out what's left, the amount of stock that's left, and then you carry that forward to the next month. And it's just rinse and repeat. Every month you do the same. Okay, so that's it. That's it for the inventory. This is basically everything you need to know about inventory. It doesn't get more complicated than this. We try to break it down in a very concise manner. I hope I did justice to this inventory account because it's really just a record keeping of your stock because it's important. I mean, if your stock goes missing and if there's theft involved or there's breakages, that's your money. Do you understand? That's your assets of your business. So this is one of the most important accounts to keep a track of, and you have to be very, very careful and pedantic with the inventory stock control account. So I hoped I explained it as best I could. Please, if you have any questions or suggestions, or you want to ask anything, we're always here welcome to answer your questions. Okay, so that's it. That's the lesson on inventory stock control. Yeah, Sean from Mel's YouTube book site YouTube channel. Please like this video, share it with everybody you know, and please subscribe to the channel. We're going to be breaking down every single part of the accountancy process. We're going to break down all the individual accounts and explain to them the best way we can. So please subscribe so you can get notifications when we're going to do our next lessons. All right. Yeah. And any questions, queries, please ask questions. I'm more than willing to help you. Sean from Mel's Book site YouTube channel. Good day on you.